Welcome back to our pre-budget special, the big numbers. As we have been discussing, this time the government is going to actually be on the front foot. They're going to have more revenues than they estimated in the interim budget. How much more and where will it use this money? We have now with us Neelkanth Mishra, member of the PMEAC and Chief Economist, Axis Bank, also Chief Strategist at Axis Capital. Neelkanth, thank you very much indeed for your time. Well, first up, what's the estimate you are working with? 1.3 lakh crore extra comes from Reserve Bank, clearly. Against 80,000 crore, they have given 2.1 lakh crore. So that 1.3 is there. How much more would you think the revenues will increase given very good tax collections?
So the nominal GDP itself, I think, can get bumped up because growth in the last 6 months, growth forecasts have been revised upwards. And as you know, the fiscal deficit as a proportion means that there will be more crores of money to spend with. So give or take round figure of 1.5 lakh crores of extra expenditure that the government can do if it needs to. It has to figure out what to do with that.
2 lakh crore,
first,
you're saying?
I think, no, 1.5 lakh crores. So 1.26 from the RBI, extra dividend, and then there is an additional funds from higher tax to GDP and also the higher nominal GDP itself.
Yeah.
Now, the question to ask is, what can the government do with that 1.5 lakh crores? I think that it is very likely. If I was recommending it, I would recommend 20 basis point reduction in the fiscal deficit target. Remember that in January, when they were working on the February budget, the vote on account, the government felt that the economy could withstand 70 basis points of consolidation. And given that the FY24 deficit came out to be 5.6% instead of 5.8%, which was there in the revised numbers, if you build on 70 basis points of consolidation on that, then you get to a 4.9%. That takes care of about 60,000 crores of that 1,50,000. The next question for budget makers would be, should we do more? Can the economy withstand more? Because there is fiscal space, so can we bring it below 4.9? And there the question would be, if you consolidate too fast, then it becomes a risk to the economy as well, because then the economy slows down and the debt to GDP concerns then actually become worse. And therefore, it is very possible, the government should be trying to spend that 90,000 crores. Now, when you think about the capex versus opex split, one of the big measures of the government, which has actually worked somewhat better than most people expected, is the interest-free loans that were given to state governments. And that number was 1.3 lakh crores in FY24. For some reason, in the vote on account, maybe because of lack of fiscal space, it was brought down to 1.1 lakh crores. It is reasonable to expect that that number could get bumped up, and the government may offer 1.5 lakh crores, maybe another 40,000 crores of an increase in the FY25 budget. And then you are left with about 50,000 crores. Some of that very likely will go into the expansion of the Pradhan Mantri Awas Yojana Gramin, the rural housing scheme that the government has been talking about. And then there is the remaining 25,000-30,000 crores, which actually could be used for several purposes. So that's broadly the contours of the changes that you would expect versus the vote on account.
Okay. Just to get the numbers right on the fiscal deficit, you said 0.2% percentage points lower. So it was 16.9 lakh crore, which is what they had said that would be the fiscal deficit. It comes down to what, 16 lakh crore or something? Or if you are thinking in terms of a market borrowing number.
So it goes down from about 5.1% of GDP to 4.9% of GDP. That's a easier way to remember it. And that would be about 60,000+ crores of reduction in the absolute numbers, yes.
Okay, so then in the interim, they said 16.9 lakh crore as aggregate fiscal deficit. You're saying that it could go down to 16.3 or 16.4. So you expect market borrowing also to come down.
Good.
I mean, that's important because that will mean cost of capital for businesses improves, as your paper pointed out.
Oh, yeah, absolutely. Absolutely. So we have been talking about it. So we felt that given what the state governments are doing, and there is, the FY25 budgets from the states also, we expect that the aggregate deficit could be, I mean, it's currently about 3.1, but generally the actual deficit comes out to be much lower. And if you adjust for the interest-free loan that is counted as capex in the central budget and as part of capital expenditure in the state budget, so there's kind of a double counting. I think the aggregate government borrowing by FY26 could be well below 7%. So I think the cost of capital coming down is a very strong argument. But remember that as the RBI pays its dividend, how it embarks on it is also very important, because remember that when the RBI pays a dividend, like any other bank or any other company, it is actually shrinking its balance sheet. So in the process, the net impact on the borrowing number will not be very meaningful. So we have to be cautious on how we interpret it, and therefore, when we think about how the government is going about allocating its resources, remember that they will also, because they're very careful people, they will also separate out what is sustainable and what is not, in the sense that there is an element of a one-off in the excess dividend that the RBI has given.
Yeah. No, I
and
agree
it will
with
be
you.
dealt with in a one-off way. So,
No, yeah, I agree. But, the way in which the Fed interest rates are panning out, it may not be much lower. And the Reserve Bank has a lot more money to put in US Treasuries. So perhaps it won't be that much lower. We may have this one-off one more year, if not 2.1 lakh crore, maybe 1.5 lakh crore. But that's a different matter.
So correct. That's absolutely correct. And in fact, when this special dividend came, we wrote, we published notes on this, that FY26 also is likely to be above 1.5 lakh crores, even on conservative numbers. So I'm totally with you. But that's not how bureaucrats generally are trained to think. Forecasting is very much a markets activity. The bureaucrats tend to be quite conservative in their thinking. So it is unlikely that they will extrapolate from this and say that, oh, look, now RBI every year is going to give us 1.5 lakh crores or 2 lakh crores of dividend. I don't think that would be prudent on their behalf.
Okay. Just one more word on this capex spend. See, if they give a higher interest-free dividend, interest-free grant to the states or loan to the states, that will come under capex, right? Capex is at the moment, the 10 lakh crore has become 11.1 lakh crore. But now, both states and centre have only 8 months to spend. You think increasing that will be... you were the one who once pointed out on the channel that spending is also very difficult. It requires bandwidth.
It is very, very difficult. So, but you're spending it on anything else is going to be much more challenging. So let's look at it this way. The states sometimes can also draw down on that loan, because that was the allocation for this year, and then choose to spend it in the next year. So it is not necessary that, because see, remember that the states also ended the year with, I think 2.5 lakh crores plus of cash balance on their balance sheet. So it is not that they are able to spend everything. And the assumption should be, and there are some states which are far more aggressive, some states are, of course, very slow in their administrative steps. But the states that can spend and are coming out with valid spending plans maybe can draw down better. So, but giving them an option to spend is far better. The other alternative is to, because see, any other scheme that you come up with is going to take time to sort of design and then detail and then implement.
Yes. And
then the easy thing which everyone seems to think of is do income transfer, just put money into people's bank accounts. Yeah. So as some of the debates have rightly said, this is not a very large part of this is sustainable, in the sense that it's only the last 30,000 crores of that 1.5 lakh crores ballpark number that I mentioned early on, which can be considered to be a sticky number, in the sense that your nominal GDP is doing better, so great. Tax to GDP, it has gone up, maybe it will stay higher. And therefore, that's the only number that you can really play around with. And given that the states themselves, so we put out this note that Maharashtra was the 10th state, it was not the first state, 10th state to announce an income transfer scheme for women. So if you add up what Andhra and Telangana and West Bengal and Assam and Tamil Nadu and Karnataka and Maharashtra and, so these states are doing, Madhya Pradesh, the total number is 1.8 lakh crores already. So 0.6% of GDP at an annualized base is already being spent by state governments on income transfer schemes. So another 25,000-30,000 crores is not really going to move the needle much. So that's the reason why I don't think the government is going to embark on that.
Okay, so where are you expecting the money to be spent then? If there is Revex, after all, there are some people who say that the election result indicated pain at the bottom of the pyramid, and therefore, and immediately after the election, the Prime Minister even announced expanding the PMEAC, the Awas Yojana. So what would you expect in terms of revenue expenditure?
Yeah, so, well, I think that the schemes like Pradhan Mantri Awas Yojana are the ones which will get a higher priority, because I think the priority of the government has been, if you see the behavior, the intentions visible over the last 10 years, is that they would rather help build assets which then last a while and then help the productivity of the household over a period of time. So whether it is toilets or electricity connections or rooftop solar or the Awas Yojana. So those kind of schemes, I think, are where you will see additional expenditure.
Okay.
Because
let me try and,
if out of 1.5 lakh crores, 1.26 lakh crores is a one-off, it would, that's why I feel that it would be much more prudent to hand it over to states as a one-off, extra loan. You want to build some assets with it, go ahead and build it. Because that can't be steady, continuing expenditure.
Fair point. I have to quickly rush in one last question, since I'm out of time. What would you tell your market viewers? What are the good bets, pre-budget or for the year itself?
So I would first tell the market viewers, which I've been trying to tell for the last 10 years, please don't pay too much attention to the budget. I think it has very low relevance for the overall markets. In terms of what to prioritize, I would continue to be cautious. I know caution over the last 1 year has been a bad thing to do. Markets have been on a tear. But some of the underlying issues, that economic acceleration that we were seeing now seems to be stabilizing. So we are growing very well, but we are no longer accelerating, and therefore the positive surprises on earnings are likely to dissipate, and we are going to get into a period of consolidation. So it's better to be prudent, be in large caps, in lower price to earnings multiple stocks.
That's very sage advice, Neelkanth Mishra. Thank you very much for joining us. The big advice is that a large part of the government's extra income from the Reserve Bank is a one-off dividend, and therefore the government should not be going on a spending spree, perhaps will not go on a spending spree. That's it on this special budget edition. Thank you very much for joining.